everybody, this is Jeff Scott, and this is my weekend review for September 10th, 2017. No, that is not where I live. That is in Maine. Unfortunately, I live in Florida, South Florida, where the picture would be a little bit different if I showed you a picture of what it looks like outside. Fortunately, I was able to escape up to New York City, and I'm doing this in an area without any risk of wind, rain, and other fun things. I've entitled today Bracing for Irma for obvious reasons, but one could also be bracing for something to change in this market. As always, I start with a 15-minute market review using slides and then TradeStation. Then I jump into HGSI. I end up looking at a top-down review of the industry groups and then a couple of the stocks that I found to be interesting. As always, it's for education purposes only. I'm a doctor, not a broker. Most physicians lose money with their investments. I am independent. Nobody pays me to say anything good or bad about them or anyone else. I pay for all the tools I use, and trading involves risk, and you alone are solely responsible for any decisions you make. I do like to point out my influences. In fact, at the top it says be your own guru. I remember Ian Woodward, may rest in peace, whose birthday was over the last week, who made a comment to me once, said, "Jeffrey, I am not a guru. I will teach you to be your own guru." And I think that's how each of us should approach the market. We should learn from people that we think are smart, and then we should take those learnings, put them together, and become the trader that we want to be based upon what we learn and what works for us, not what works for somebody else. I started with CanSlim, which was improved by Morales and Catcher, taken to the computer, best by Ian Woodward, Ron Brown with HGSI. And I married that with how to actually trade, not what to trade on the left, but how to trade them on the right with John Person, author, mentor, speaker, software developer, has got some great signals, PPS, which is free in Thinkorswim, HCDs, last conditional changes, among others. This is my buddy George Lee from Canada. He's a great trader. I've shared the podium with him many times. Always a pleasure. Van Tharp, sort of the guru on money management. And then for those looking for something a little bit easier, perhaps, this is Guy Cohen. He's got some great books, websites, and some scanners that allow you to find stocks with flags and other good patterns and make it very simple. Speaking of John Person, he has a live meeting November 30th through December 2nd. I have a one-day meeting post, so that's going to be a sort of a big deal for some 4 days in a row. For more information about John's summit, you have his email, his website, and his phone number for his office. Here's my email for information about me, specific things about what I plan on doing. I usually like to just talk about what I do, how I do it, and teach. So I'll demonstrate and teach my favorite tools and strategies that have led me to a seven-figure return this year. Yep, even with the market correction, I'm still up 7 figures. Merging what I've learned from Ian and John. Now, I do this not tied to my computer during the day. I swing trade, day trade, require less than an hour each night. If I didn't do these recordings, it would require a lot less time on the weekend. And I do this while working full-time and not glued to my screens all day, although people that work with me will tell you that I do like to look at my screens. Of course I do, because I want to know what things are doing, but not that I take a lot of trades during the day. Topics will be principles learned from Ian, finding my A-trade, managing my trade stops, position size, how I use options to increase return, how I set my scans in TradeStation, Thinkorswim, putting it all together. It will hopefully be, if it's still standing when I get home, at the Palm Beach Garden Hilton Garden Inn, $400 if you're attending John's meeting, $500 if not. 12 attendees only. I'm about at number 8, breakfast, lunch, and Saturday night dinner included. And it's usually an over-the-top dinner on Saturday because I'm not doing this to make money. Therefore, I have to lose at least $1 on the program, so I spend it on food and MP4 videos of each presentation, as well as slides and PDFs. I do not offer a slide and video only option. I do not live stream. I don't want to have the hassles of that. And since I don't do it to make money, it'd be hard to sell it. You might ask, if I don't do it to make money, why don't I just give the videos out to everybody for free? I've thought about that, except it's not fair to the people that do spend the money to come, so that won't be an option. I have a lot of tools. I purposely hide my screen, but I need TradeStation or Thinkorswim. Genesis is a great charting platform, especially if you do futures. I do most of my analysis with HGSI and EdgeRater, as you'll see. I will at times look at seasonality, and there are a number of great websites. Speaking of great websites, here's a site for highgrowthstock.com. I point out two things: free 30-day trial. And if you go under investing strategies, you'll see my name, Ron Brown, and others. Both Ron and I have been pretty prolific with videos of both how to trade the market and how to use HGSI. Stock patterns are cyclical. You need to know where you are. I continue to think we're in the stage 3 of uncertainty. I do think we're going to take a fall. I don't know when that's going to happen. Therefore, since I think we're in uncertainty, I will be looking at raising cash, taking smaller positions, and selling premium far out of the money, both above and below the price. I'm being careful now. I've made a lot of money this year in the market. I don't want to give it all back. Ian used to say, don't play chutes and ladders with your money. Unfortunately, I'd be the first to tell you that sometimes I'm a good student, but I forget to do what I'm supposed to do. And I've ridden markets up and down, as I'm sure others have as well. Sector review. I like to look very high view of the major stocks and the major sectors. It gives me a few senses. Now, the first thing is materials and energy, extremely weak, even though oil prices have firmed this week with the hurricanes. Now, perhaps misleading: financials, especially regionals and brokers, looked very strong on Friday. This is after a week when they fell quite a bit. I had an FAZ position that actually was profitable despite what you see on Friday. Falling rates cannot be great for the financials, so they still are at risk. Industrials are strong, but technology, semiconductors, staples have been quite weak. Retail is mixed. Utilities have been strong, which you might expect in a low rate environment. Healthcare has been mixed. And down here, gold miners, and you got some copper and other players here, certainly weakened on Friday, but they've been strong as of late, and we'll look at those. If I look at the major markets, the green is the 17-day moving average, the yellow is the 50, the red is the 200. I have the E-minis, I have the NASDAQ futures, I have the Dow, and I have the IWM. And except for the IWM, the 17 is above the 50, which is above the 200 in red. That means these three are in an uptrend. This one's kind of choppy, but it's still above the 200, but below the 50. If I look at the VIX is certainly a lot higher now than where it was over the last year or so, which suggests higher volatility in the market. And this is the VIX futures, and the dollar is at the low on the chart here. If I put this out to a weekly, again, 17 green, 50 in yellow, 200 in red, you can see that the markets, even the IWM, is above the 50 weekly moving average. What's interesting is the dollar is so weak that it blew through the 200 weekly moving average or 1,000 daily moving average this week. A lot of people, and I can see why, are calling for just a very impressive and significant weakness in the dollar, and that perhaps gold is going to have a big run. I'm in that camp as well, and therefore I have a pretty significant gold position right now, but that position can go away very quickly depending on what the markets do. Just another way of looking at charts, this stack is the E-minis, then the NQs, then the TFs, then the NYSE, and then the Russell, if I remember correctly. No, this is the YMs, this is the Russell. The point here is that all these are in uptrends on the monthly, starting to get choppy on the weekly and very choppy on the dailies. But longer term, we're still in uptrends. I said rates dropped. Well, this is the 10-year and this is the 30-year. Typically, rising rates are good for the top, and falling rates are good for REITs, MLPs, utilities, dividend payers, and home builders. And clearly, I saw home builders showing strength, some dividend payers, definitely utilities. MLPs are confusing because of Harvey, and I saw a number of REITs pop up. Rising rates are good for banks, especially regionals and insurers. It's interesting, a lot of insurance brokers were popped up this week. Perhaps they'll be able to raise prices and they'll have a lot more interest following the series of hurricanes that are hitting this country. The AD lines have pulled back, but they're not far off their highs on either the small stocks or the large stocks. If I look at stocks above the 200-day SMA or above the 40-day SMA, I put them at neutral. I look for extremes. Now, this is my 3-month or 13-week new high, new low. And last week I said we were at a point where we might see a reversal, and we did. 2 weeks ago we were down here. I look for extremes. When I'm at extremes, I know the market's likely to reverse. The daily McClellan, let's just look at the weekly here. The oscillator has turned down. We did get the highest high going back pretty much since December, and it's turned back a little bit with the market weakness. I look for extremes again. Right now, I don't see anything here that's giving me a great signal. These are my buckets. I take the S&P 1500. I look at each stock with their Bollinger Bands. I look at how many are above in green or below in red, the midline. You can see we're slightly positive. And then I break the Bollinger Bands into 10 deciles. I add one below and one above, and I look at where the market sits, and this is pretty darn neutral. What I'm looking for are big numbers either below or above, which tell me the market's going to reverse. HINDYs are signs of the strong hand selling to the weak hands. Typically, HINDYs occur before, or a series of HINDYs might occur before a major market correction. And we haven't had a HINDY now in a couple of weeks. Here's the last one on the NYSE. And the last one was in early August on the NASDAQ. Market tone, I said we're in chop. Well, we're mostly red. We're mostly yellow. The SOX is the one thing in the red. If I look at sector strengths, the one that's in the red, I believe, is financials. We have green on the staples and on energy. Interestingly, energy popped up with Harvey, but for the most part, we're in yellow, which is chop. The canaries in the coal mine, you can see what my canaries are. These are some of the market leaders. I look for these to give me a clue as to what the overall market is doing. You could see despite up days on Friday, these were weak on Friday. They did have a kahuna to the downside, but they are above their 17 and above their 50-day and above their 200. They are in a squeeze. They're close to new highs, but they feel kind of heavy here, and we'll see. I put together this index in June of the major leaders with the idea that this would fall over before the market falls. And as you can see, it too is squeezing, but right below highs. Again, hard to say that this run is over, but I can't ignore the time of the season. Know your news and earnings dates. To the left is on Bloomberg. If you do Google for Bloomberg and economic calendar, you can find this. And I like to see, what's happening this week. The bill auctions don't affect me too much. Here's Redbook, JOLTS is some job numbers, petroleum status on Wednesday, CPI on Thursday. I just lost power here. That's kind of interesting. That must just be temporary. So I'm in New York, not back home. Or maybe there's a timer on it. That is weird. Sorry about that. And looking down here, Empire State, industrial production. So some things about capacity. Here's the upcoming earnings. This is actually about 2 weeks worth. And you could see that we're getting near the end of earnings seasons. But if you have any of these stocks, here's Oracle, Lakeland, KB Home, Lennar. So we have a number of homeowners coming out, home builders coming out in the next week or so. And as I mentioned, they are showing some strength right now. As my quote in the lower right hand hasn't changed for years. It is a judgment call to hold stocks over earnings dates. It's bad judgment to not know when your stock's earnings date is scheduled. Market thoughts. Bottoming is an event. Topping is a process. We're in the time of year where significant corrections have occurred. We are also in a year ending in a 7, which has been when some of the biggest corrections have occurred. I do think we're in the topping stages. Market is in chop with rotation of leading industries and stocks without major moves. In the indices, falling rates, falling dollar cannot be great for the overall market. Copper and ore have started to roll over. That might be an early sign of trouble. FCX, Valley, and Tech falling. Low rates likely to favor home builders and utilities, while banks and major financials languish, although financials firmed on Friday. Technology remains weak. Not a time to be all in, but perhaps not yet a time to be all out. And I am continuing to play small positions, high level of cash, and selling premium way out of the money to prop up my returns. I'll do my typical top-down review and maybe some bottoms-up depending on the time. On to the charts. Now, I like to go quickly into TradeStation where I have a process that I do every night. And my process, for those that have not been here before, is I look at 5 or 6 different things. I look at this, let me go to the E-minis to start with, and then I'll go quickly through the other indexes. I want to know whether I'm in a, I'll put this down, uptrend. Where do I want to put this? Hold on a second, put it down here. Am I in an uptrend or a downtrend? So the first thing I'm going to look at is my PPS buy-sell indicator. This is free on Thinkorswim. It's part of a package that John sells for TradeStation. Green is in an uptrend, red is in a downtrend. I'm looking at 3 time frames, so I'm in a buy on the daily. I am in a sell on the weekly, and I am in a buy on the monthly. Okay, that's the first thing I look at. The second I look at is the color bar. That's an Elder indicator called the Elder Impulse indicator. And I know from using it for a long period of time that if it's a blue paint bar, that means I'm neutral and I can do whatever I want to do from a buy or sell perspective. If it's green, that's in a buy signal. And if it's red, it's a sell signal. I should be short, or neutral. I shouldn't be going long. So I'm neutral, long, and neutral. So the first two are mixed, but more bullish than bearish. Am I within or out of the bands? When I get out of these auto envelope, I have a tendency to go sideways and go back in. I'm neutral. The fourth thing is, do I have any little red dots or green dots below, which are evidence of divergences, and I don't see any divergences in the daily, weekly, or monthly. The fifth thing I looked at is my high jump bar. I know when it's above 95, I'm going to come down. When it's below 10, I'm likely to bounce and go higher, and that is neutral. And then I look at the bongos, specifically the one in the middle. Green is my buy signal, red is my sell signal. So I see a mixed picture at best. I'll call this neutral, and I'm not really biased one way or the other on the E-minis. Maybe a little bit to the long, but minimally. The YMs, red, arrow down, so it's in a sell signal daily, but in a monthly and weekly uptrend. It's got a red, blue, and blue. So this is decidedly weaker than the E-mini, so these are put to a negative. My high jump is 15, there's no dots, and I'm still in a weekly bongo as green. So this one might be in just a pullback, but I'm going to put sideways at best for the Dow. Then I'm going to look at the NASDAQ. I see a buy signal, got up to the envelope and came back in. I've got the red dots showing divergence, that's a negative, a red paint bar here, a short term and a medium term and a long term buy signal. 43, still green. So the NASDAQ holding its own, but best neutral. And then I'm going to look at the Russell here. And the Russell's got a new sell signal daily and weekly. It's in a red weekly bongo. So the Russell is probably the weakest of the bunch. So none of these are rip-roaring bullish or bearish, but I'm not getting a great signal to go one way or the other. You want to see what bearish looks like? Let's take a look at the dollar. This is bearish, but there's some changes going on. So I got a daily, weekly, and monthly. I got a red paint bar. Now, here's the change, and I've got a red weekly bongo. I've got these green dots here. These are the dots that start to occur when there's divergences. As you can see here, divergences can go on a long time before you reverse. I'm sitting below the envelope. That's another reason why I expect the dollar to bounce right here. And my high jump has dropped to 2.95. Now, to be fair, I thought the dollar was going to bounce last week. It really didn't do much last week. I think that the dollar is getting close to a place of bottoming, which could have impact on metals and other things in your portfolio. Speaking of yellow metals, here's gold, and you can see this is what strong looks like, but too strong. Buy signal, buy, green, here's blue, you're at the top of the envelope, above the envelope, that's concerning, and your high jump is at 99.20. Unless we gap up gold on Monday because something bad happened this weekend, this tells me to think about selling my nugget position. So Gold looks pretty high. And then let's look at the VIX, and you'll see some chop. We're in a buy, sell, sell. So short-term buy, green, green, and blue. Well, that actually looks pretty positive. We're in the middle of the envelope. There's no dots. We're at 43. So the VIX also looks neutral, like some of the indexes, neutral to positive, and that can't be good for the market. So that gives me a sense that this market is at best neutral, but clearly there's some risk to this market. Then I jump into HGSI, hit my designer, and I go down to Woodward and Brown user groups, and I'm going to go into Major Markets Plus. I'm going to hit my warehouse, and what that's going to do, let me just adjust the size here because I have to change my resolution for the video. If I'm in the designer, and then I hit my warehouse view, it'll open up my warehouse exactly into the same directory that I'm looking at it in my designer. Just play a little housekeeping here. Apologize for this. But unfortunately, if I did this in 4K, some people would scream that it would take a week to download it, so I'm not going to do that. All right. I'm going to go to top-down view, which is only price and volume, heavily weights 1 day versus 5 days versus 3 weeks. And sort by raw combo, and I could see the Dow Jones transports. Well, that's interesting. That might be a positive. I'm looking for the market to recover. Had the most strength, and I did see some strength in trains. Utilities, no surprise. Small stocks, bonds, NYSE, gold. And on the weak side, big stocks, NASDAQ 100, semiconductors, and U.S. oil. Then I take a look at all my things that I'd like to follow very quickly. And I'm going to look at them. And again, I just got to play with size here because I changed resolutions. At home, I remember to do this first, so my bad. All right, so here is the S&P 500. And let's just go into a simple view. So on the top are my bongos. This weekly bongo, which is the top thing, is my most accurate long-term buy-sell signal that I use. That's purely objective. This is a short-term bongo green. So typically that would be a retracement in what might be a downtrend, if that's green. The next two are two different variations of the Hindenburg. And it's been a while, so let's just go back to 2007 and show you how the Hindenburg can save your bacon. You notice in 2006, we had a number of times, first of all, you hardly ever see the Hindenburg fire. And then all of a sudden, you see a bunch of them coming together, followed by a big market correction of, only 60 points, but it was about 5%. All right. Market ultimately drops down to 1224, so it's more than 5%. It's now about a 7 or 8%. And I'm watching the market, and now I'm back in as my bongo green has turned green at 1278, 1280-ish, actually a bit higher. And now I'm tootling along. It's 2006. Market's in a beautiful uptrend. Again, a pretty significant correction, 1464 to 1392, so it's about 5%. Nothing huge. And you notice my weekly bongo fired. The bongo's late, but I don't like to enter into positions when the bongo's against me. Now, all of a sudden, you notice to the left, I see no HINDYs. And I start to see some HINDYs come in here. That should get me interested. And then, boom, series of Hindenburgs, and the market corrects. Now, in 2007, we had a pretty big correction, but we came back up to the top. We set a new high, and then we started seeing Hindenburgs again. Had you known about this, you might have said, gee, I should get out of the market. And that would have been a good thing to do because that's when we had the big correction of 2007 and 2008. When not that anybody would have gotten out here at 1575, but down at 1260, that was a pretty big pretty big correction in the market. So I look for those, but I look for a series. I don't look for just one. So back to the current time, and we've had a couple of HINDYs here and there, but nothing current. So the S&P is going sideways, the 8-day exponential, blue is the 50, the green is the 17. The 17 is dropped below the 50, all above the 200. This is a kahuna to the downside, which is a high volume or high conviction move to the downside, which occurred a couple of trading days ago. But for the most part, I would say the S&P is in a relatively sideways range. In fact, if I start connecting up the dots, channel here, and it's in the lower part of the channel, but it hasn't broken out of the channel. So the S&P sideways, not great, not horrible. The Dow Jones Industrial Average pulling right into the 50. Notice the bongo just went red. So this might be a place that I might expect one or three things to happen here. The bearish case would be for it to drop down, or more likely drop down, pull back, and then drop down. And this here, this retest of the 50 would be when I would short. Or the bull case would be, hey, we're sitting right on support. We're going back up to new highs. So that's going to be something to watch. But we've held support here 1, 2, 3, 4, 5 times in the last couple of weeks. Will it break below and see a big correction, or does it go higher? If I look at the NASDAQ composite, again, it's above the 200 and the 17, and actually looks okay here in a little bit of a flag. And I'd be looking for it to break above the flag. The Russell 2000, which had been the weakest, is below the 50 and above the 7, above the 8 and above the 217. You can notice the bongo weekly went red here, and as we broke below the 50. So the Russell looks the weakest of the bunch. The dollar, horrible, but getting to, will this be an island reversal here, and will we be opening up? I don't know, but might we open up big here tomorrow and then ultimately trade up to that 50 and fail and go back down? That's what I'll be looking for. Notice the weekly and the daily bongo are red, however, on the dollar, which is weak. Weak dollar, you should have strong gold and silver, and we did in part of the week, and you could see Friday we gave back something, but we're in a major uptrend here on the gold, and I've been playing that with nugget. Silver looks very similar. Gold miners, which is how most of us end up playing gold, also a nice uptrend, giving some back on Friday. If I look at the dollar, we looked at that before. Let's just look at the VIX, I'm sorry. And you could see that, let's go at a weekly chart. The VIX had been living a little bit lower than where it's at today, and it's had multiple moves up to this 200 weekly or 1,000 daily moving average and failed. And I'll be watching the VIX very closely. So my sense of the market right now is, as I said before, we're kind of in chop. We're sideways on most of the indices. We're at some support in some. On the Russell, we've dropped below support. I think this market is in a place where it could go either way. If I had to argue, I think I'd be risking it to the downside, but right now we're going sideways. Then I go to industry groups number 7. I hit warehouse view. I got to take off industry groups equals no, or else I'm going to get nothing. There we go. And you can see I've got 174 index groups. And let's just look at what's moving in the last couple of days. 43 groups are up on a 2-day force. 22 groups are down, so that's leading to the upside. Now let's look at these down groups. Exploration, steel, oil, gas, semiconductors, precious metals, steel, application software, internet-based services, midstream, MLPs, apparel, footwear, department stores, specialty apparel, casinos, renewable energy, rail freight, and tobacco. My goodness, those are all the things that were up over the last couple of weeks. And then let's look at what's to the upside. And again, remember I said you've seen industry group rotation. Healthcare is back with biotech and large. Property and casualty insurance high despite 2 hurricanes. Home products, REITs, specialty pharma. Then I right-click on this, change the index group, and I start to now look at what's moving. There was a meeting called ESMO last week, the European Society of Medical Oncology, and some of these companies, including NewLink and Cura, had some great data come out. One of the hard things about biotech is you got to know when all these meetings are and the data is being presented, because if the data comes out bad, stocks go the other way. Let's just take a look and see if any of these are tradable. Now, NewLink, let's just go on to a weekly. Well, I hope this is actually still recording. I think it is. NewLink had been as high as in the 50s, and on some negative data dropped down to the teens. It had positive data come out on Friday, so that's a huge move. Everything went green on the weekly. And if we go back to the daily chart, which we just did, we can see that it's moved a lot on the daily, but it could have a lot more ways to go. This is a Bible gap up. It was squeezing for a long time, kahunas. I'm interested in NewLink, but it's a preclinical, meaning it's still going to be data-driven. Cura, another similar story. Don't know about this one long-term, so let's look weekly. So it's at an all-time high, so it's a relatively recent introduction. It too had good data, early-stage data at ESMO. Don't know anything about Insmed, but it did have a Bible gap up. Array had some positive data at ESMO as well. This is a little bit easier to buy as it's in a nice uptrend here. You could argue it's a cup, a handle, and a breakout coming out of a squeeze. So these are small biotechs with recent data. And Gilead, which has been in a nice run since announcing that they were going to buy Kite, one of the early stage pharmas. The benefit of these early stage pharmas is these big guys like Gilead, Amgen, et cetera, Celgene, are relying heavily on acquisition of companies with products that are close to coming to the market, and they bid the prices up. So they paid a lot of money for Kite, but that woke up the stock and it seems to want to go higher. Let's look at this on a weekly. And you can see this, that it's been in a downtrend from 120 all the way down to 60. It's got to get above that 200 weekly or 1,000-day moving average, but Gilead looks like it's changed its colors and wants to go higher. Biogen, one of the big players here, certainly in a nice uptrend. Don't know anything about Veristem. So what I've been playing is LABU. I had some Kite and I got a couple other small biotechs. And it basically went sideways and did nothing this week. But it had a nice run up. But you could see LABU has been in an uptrend from 32 to about 80 if you go back to the beginning of last year. Whenever somebody talks about prices of drugs, this thing falls hard. All right, so that's biotech. How about large pharma? AbbVie and BMS, two different stories, similar in one thing. AbbVie is a spinoff from Abbott. And it's sort of their high-growth, biotechy-like product line. Sorry, I'm trying to do this. And the thing about AbbVie that I like a lot is it's a big pharma that acts like a biotech, and or it's a biotech that acts like a big pharma. It's getting extended. The high jump's as high as it gets. Look at the volume that came in at the end of last week. It had some patent wins, if I remember correctly. Notice it's got some earnings per share growth, not much different than its multiples, so there's expansion opportunity there. Pays a 3% dividend. I've talked about this a number of times. I'd probably let it come back closer to its moving averages. Bristol Myers Squibb pays a 2.5% dividend, doesn't have the earnings per share growth, but it had some great data for its drug Opdivo, which is its immuno-oncology drug, and it moved up this week, which is good because I had some 55 calls that were not making me money, that were just doing nothing, that expire in, I guess they expire on Friday, so they're finally profitable. Eli Lilly, maybe trying to do something here. Bongo did turn green. It did have a pocket pivot this week. but we shall see. And AstraZeneca also had some good news about their PARP inhibitor at ESMO with the Kahuna that just turned green. They pay a 4.2% dividend. So Big Pharma looks interesting, especially the ones with dividends. Now, I'm still scratching my head why property and casualty insurance are going up. Maybe it's because they can raise their rates. I'm looking at on one of my TVs of how bad Irma is. Here's Chubb, big bell toll reversal sign on Friday, pays a 2% dividend. Travelers reversal. Allstate also reversal. Maybe they felt that it wasn't going to be as bad as they thought. I think it's still pretty bad. Don't understand all these big reversal in AIG. So clearly this is not a group that I have great insight to, but you have a bunch of stocks showing a bottoming pattern and then a reversal. So property and casualty made it to the list. Home product stores, this one I get. Restoration Hardware had some good earnings, and you'll see that they've come off the bottom. They had a nice move. Bible gap up on Thursday. Great earnings per share growth compared to PE, lots of demand. I thought about buying this in the 30s. That was a mistake. Probably not too late to be buying Restoration Hardware. But Home Depot and Lowe's should be big benefactors of the two hurricanes as people have to rebuild. Even lumber liquidators and other home product companies are going to benefit as well. This is Home Depot. This is Lowe's, probably an easier buy point sitting on the 200. Home Depot's already moved up. Well, I think it will go higher, taking not predatory advantage, but it's playing into its time. I don't know much about packaging companies, so I don't really have much to say about these except for chart patterns. Bemis is a takeover candidate, which caused it to pop on Thursday and Friday. Other than that, I don't know anything about it. 3M company, I'm surprised it falls under containers and packaging. Pullback, sitting at the 50, had some kahunas come in, still in the downtrend, pays a 2% dividend. This one I did like, Packaging Corporation of America, uptrend, sideways, looks like it wants to go higher here, 2.2% dividend. And that's, I usually don't go below the index. Infrastructure software. So you're probably all aware of the big, what's it called, Equifax breach. Don't you like how the CFO and others sold stock before they told the public that there was a breach? So here you have Symantec in a downtrend on the Equifax News Bible gap up, pocket pivots and kahunas. In my experience, these are short-lived runs. FireEye, kind of trying to break out here. Don't know anything about OKTA. Oracle earnings this week, so I would be careful. Palo Alto Networks had some good earnings, gapped up, sideways. Again, Palo Alto Networks and CyberArk have been the ones I've played, and these are things that have been in pretty substantial downtrends. Is it different this time? Is this purge or going to make it different? Is it time to buy? It might be, but again, these things have had, every time there's a breach, these things pop and then they come right back down, in my opinion. REITs should be strong considering interest rates are down, and so we can look at, here's Public Storage. This had been beaten up. It broke above the 200. Pocket pivots and kahunas, great earnings per share growth, 3.7% dividend. A number of the hotel trusts look good. I think they're going to get a lot of occupancy related to the storm that's hitting California, hitting Florida right now. Two pocket pivots, two kahunas, a new Bongo Green. This is RJ Lodging Trust, pays 4.2%. No, it's been in a downtrend. Camden, been in an uptrend, pays a 3.1% dividend. Looks like it's breaking out here, but it's starting to get extended when I look at my high jump. CubeSmart, another storage company like PSA, breaking out here, 4% dividend, great earnings per share growth. Weyerhaeuser used to be a paper company, turned into a REIT. Still in a downtrend here, although it did break above the 200, have a new green, pays a 3.7 dividend. I think the story here is the dividends, specialty pharma, third healthcare, Shire, broad product line, hemophilia products. They make the Jennifer Aniston Love Your Eyes drug. It's been in a downtrend, broke above the 50, couple of pocket pivots, a new bongo green. Maybe it's the beginning of something. I'd rather not buy things in downtrends. Acadia, don't know anything about this, but it's broken out to the upside. Number of pocket pivots, everything is green. Valiant, we know Valiant, this is the stock that shows why you don't hold on. This is what happened to buy and holders. It's a monthly chart. Ouch, 2 years, 264 to 13. You don't want to be long this one except for buying it because you think it's going higher. You don't want to be holding on. It does have demand, but boy, the stock has done nothing ever since it had that drop. ITCI, looks like it's broken out nicely. Everything's green up here. Doesn't make money in their preclinical company. I mean, the big winner here has been Supernus, and this one was easy to spot because it started having earnings per share growth, and those are slowing down, which bother me, but what a beautiful lower left, upper right. Still in an uptrend, pocket pivots this week. Looks like it wants to go higher. Consumer electronics. Can you believe what's on top? GoPro. It had good earnings. Bible gap up. I'm not sure I'd be buying it. Held up on Friday. Got great earnings per share growth coming in, at least in the second quarter. Fitbit, a perennial loser. Up Thursday, down Friday. Control Corp. If you have a home with home automation, you probably know who these guys are. Nice lower left, upper right. I don't like the earnings per share growth. I like what they do. It's in a hot industry. Talk about an old name, Sony. Then get to the index. And lastly, household products. Estee Lauder is a household product, but nice uptrend, expensive stock, good earnings per share growth, pays a small dividend. Colgate Palmolive. If you want to buy a staple, you want to buy it when it's low. You're in a squeeze. You had some pocket pivots come in. You're close to a PSAR reversal. Pays a 2.2% dividend. I'd wait for it to break out. Energizer. Look at this nice move on Unilever. High jumps, okay. All right. So I've now gone through the top 10 groups, which is what I typically do. Now, during the week, I look at certain of my scans. And some of the scans that I find to be most valuable is, let's just go and go into all securities. One of my favorite scans is the David Ghilardi scan of sprinters. So I've got under my name. You all will have this if you, and let's see if I can find it. Probably says Ghilardi sprinters. And these are stocks that have good technicals and fundamentals. Often they show up on the previous scan, but they don't require group to be, they're not looking at the group for us, they're looking at the individual stocks. So I'll look at a couple of these. Aetna, like most of the health stocks, insurance stocks, are in a nice uptrend. It's an expensive stock without a whole lot of growth. Very news-driven, depending on is Obamacare in or out. Patch Corporation America, we already looked at. Inogen, healthcare equipment, I think they do oxygen. Nice uptrend, looks like it wants to run again. Old Dominion Freight, this is a trucking company. Not a beautiful pattern, is in an uptrend. Louisiana Pacific, this is a wood company. Like Home Depot and Lowe's will probably benefit from the storms. Centene, they do manage Medicaid. I own some of this. Nice lower left, upper right, pretty tight. Again, gets whipsawed on Obama discussion. Zoma is a biotech play which broke out earlier in the week. It's had a big run from 8 to 18. I don't know why. I don't follow this one typically. Let's just look at FinViz. So we've got it. That's back there. Novartis deal could send stock to 19. All right, well, it's sitting at 18 now. That would explain that. So they make products that other people license. So that's one of my scans I use, which is Sprinters. Perhaps my favorite scan that I use, two of them, are, let's see. Here's a scan that looks for momentum, which is a Kahuna force. Stock's got to be an uptrend, so it's above the 200, and it's within 2% of the 50-day moving average. I see 29. Let's see about the one that's within 1% of the moving of the 50-day moving average. All right, so these are stocks that should be trading at the 50 in an uptrend with momentum. I know I liked Ingersoll Rand Corporation. Can't remember what they do. They are in the commercial real estate building equipment. Pullback in an uptrend, pocket pivot in a Kahuna, mobile breakout from a squeeze, PSAR reversal. I'd be setting buy stop somewhere above the 50-day moving average. That one looks interesting. Roper Industries is an expensive electronic stock, but uptrend, sideways, broke above the 50 with a Kahuna. Looks interesting, very viable. Look at the earnings per share growth. Illinois Tool Works, uptrend, pullback. I'd like to see it above the 50 before I bought it. Fortune Brands, Kahuna at the 50, two Kahunas in a row. So I'm looking for patterns. Another pattern I like to look at are stocks that had a PSA reversal, or they're about to have a PSAR reversal, which is a buy signal in the squeeze. So these should be stocks that are going sideways because they're squeezing. Okay, and their price should have closed right below the PSAR dot, and I know that if they trade up, the PSAR will come underneath as green, which is a buy signal for those that follow Wells Wilder. But I have a stock in a squeeze with a new buy signal. Here's a stock, mobile breakout from a squeeze here, and a Kahuna on Friday. The bongo is green, 2.2% dividend. I could set a buy stop above that PSAR dot and forget about it and set my sell stop probably down here right below the 50. So I'd have a buy stop. Let's just look at this. This is my get out of plane trade. So let's just think about this. I would set a buy stop above the PSAR dot. Let me write this down so I don't sound stupid. No, I can't find a pen. I'm in a hotel room. I'm a refugee, it turns out, as I've been told, 77.41. So let's say I bought it at 77.50. I would set my stop just a little bit below the 50-day moving average, which is 75. So if I set it at 74.95 to 77.50, I'm only putting at risk about 7%. I'm giving myself plenty of room. It hasn't closed below that 50 since June, and I'm only going to buy it if it takes out that PSAR dot and has an upward move. So if the market opens up down a lot, I won't fill. This is the trade that I put on before I get on a plane. So that's waste management. We'll talk about those at my live meeting. National Beverage, big uptrend. PSAR dot right there, it's in a squeeze. Garmin, know all about them with my new boat. I have to buy some of their stuff. So this is also one of my favorite setups. Now, if you're lazy, if you don't have much time, I won't use the L word, that's mean. Boy, I wonder where my little thing is for, oh, there it is. And you look at these things called smart groups, we do it for you. So if you go under my name, in the smart groups, you'll see 3x uptrend, big volume. I like to look for stocks with big volume. So we looked at New Link, we looked at Cura, We looked at Bemis. We looked at Array. Acacia Research. Let's see what this one looks like. Not telling me anything about the price pattern. It's telling me that there was a lot of volume came into the stock. So here's a stock that's been in a downtrend for quite some time. It looks like it's got a higher low and a higher high. It took out the 50 with a big kahuna, and the volume was 1.9 million. The average volume is 300,000. That might be something I might want to look at. So I look at the big volume. Here's my pullback to the 50 with a kahuna. So by definition, any of these stocks I look at, I like Republic Services. Let's look at this one. Should be stocks in an uptrend, which have pulled back to the 50 and have a kahuna. So here's a stock uptrend, sideways, mobile breakout from a squeeze, and a kahuna. Why do I require that kahuna? Because these things can go sideways for a long time. At least I want something that shows that they had a big movement on the prior day. All right, that's interesting. And then that little scan I just told you about, PSR reversal to the upside. And let's pull one out of here that we haven't looked at yet. Let's look at Rollins. Stocks that are in an uptrend. Clearly it's an uptrend. Has to be squeezing. And the price is right below the PSAR dot, so potential reversal. Instead of buying something that's broken out, I'm trying to find stocks that are setting up to break out. You could also look at this to the downside. Any of these, I'm trying to remember if I remember any of these from my shorting exercise that I did. Quite a few though, aren't there? So these are done for you on a daily basis. They update during the day if you have set up for intraday updates. If you enable intraday updates and then you run your update and include intraday data, then you will get these updated during day. Now in Ian's group, he has the best of Woodward and Brown, best stocks under 15. So those scans are built in. The other types of scans I do and that we'll talk about at my live meeting will be some of the scans that I do in TradeStation, and anything that I do that is not proprietary, I will give to the people that attend. So that will be things such as mobile breakouts and breakdowns. Some of my favorites would be mobile breakout, squeeze with a PSAR reversal. So these should be stocks to the downside. It's mobile breakdown. So let's look at Clovis, for example. And we see a stock that had a big reversal to the downside. Mobile breakouts from the squeeze will be upside reversals. Here's that Ingersoll Rand that we looked at that I liked. You can see this is a new PPS buy signal on the weekly and the daily. Pocket pivots, Bible gap ups, and then I'll also show you how I do the same thing in Thinkorswim, where I use a scanner to scan for, let's say, PPS buy signal with MACD divergence, looking for stocks that I might want to buy, and I might want to set that MACD divergence not on it. There's your Kura again, isn't that interesting? Set it to a weekly MACD divergence. So looking at a short-term signal and a longer-term MACD divergence, and HPT, don't know anything about this stock, and GCO. HPT and GCO, just close by looking at those two, HPT and GCO. HPT is Hospital Property Trust, so downtrend, kahuna, a big reversal, mobile breakout from a squeeze. Probably would rather see it turn up, but it pays a 7.6% dividend. Oh, that's interesting, GCO. And Genesco is a specialty apparel. This one doesn't do anything for me. So I use scanning to narrow the number of stocks I look for, and then I look at the charts. And I'll show you in my live meeting the differences between Thinkorswim, TradeStation, HGSI, etc. On that note, I just want to thank all the well wishes that people gave me for the storm. We are out. Fortunately, it pays to know people with private jets. We were able to get out of Dodge, even though it was tough to get out of Palm Beach International on a commercial flight.